stripes and bright stars through the perilous fight. Oh, the ramparts we watched were so gallantly streaming, and the rockets' flags bursting in rain gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the land of the free and the
And a very good morning to you on this October 9th, 2025. This is World HD, live each weekday, 8 a.m. Eastern Time, streaming live on X, Rumble, and YouTube. And today is Equity Thursday, where we want to take a look at some of the stocks and look at the equity indexes, maybe take a look at Delta, maybe take a look at a couple of the airline stocks. We've got airline stocks kicking off this week. Delta came out with earnings. It was a beat across the board, looking pretty good. I want to take a look at this S&P right out of the gate. Yesterday we had this upward sloping trend channel. I want to go back and take a look at this and kind of show you what happened here. Let's go to this and here we go. Okay, so this is where we left the show off yesterday, right around, and let me make this a little bit darker. All right, let me make these a little bit bolder so we can see them. All right, here we go. Okay, so here was this upward sloping trend channel. So we had this, the other night, we had this spike up, or actually in the morning, right? So we had a little bit of a sell-off on, what was this? This would have been the 6th, so we're talking 9th, 8th, 7th. So it would have been probably Monday or Tuesday. We had a little bit of a sell-off back to trend. Then we had this nice big spike up where this purple shaded zone's at, up in here. Made a new high, potentially a little bit of divergence right around in here. So let me just mark that. So it wasn't real solid divergence, but it was close, right? Pretty close to a divergence. Now there's a lot of different ways to measure divergence, right? Higher prices with lower readings in your indicators. There's a couple different ways to measure it. So it was close, right? We had the higher price, and if we look at this, we may have had, if I look down here, we may have been able to say, okay, slightly lower lows in this indicator. All right, so you can see these yellow dots down here on this indicator, or not so much on the one below it. So what I'd love to see is confirmation on multiple different time frames. We're getting higher highs in price and lower lows in the indicator. And essentially what that tells us, if you throw a baseball, right? You throw a baseball up in the air and it hits its peak and it starts to come off, right? What we're trying to do is measure that point where, something's reached its, a peak in momentum, a peak in its upside. And we're taking kind of like the derivative of that, right? We're taking the slope of that, and we're seeing, and then what we're doing is taking the second derivative, which is kind of the rate of change. So we're really taking okay, here's the price, here's an indicator we put on it, and then what we're trying to do is find first derivative, which is the slope, second rate of change. Okay, that kind of a situation, right? So that's what we're trying to figure out there. So we get this nice sell-off, really nice, stable push down, right? This is the kind of stuff, it's not it's not like one big whoosh down, right? It was pretty steady selling all day long. And we get down into this range, and at the end of the day, it starts to chop. So it's a pretty good spot where you can say, okay, maybe if this is the beginning of something and we're going to get a multiple wave pattern on the downside here, what we can do is when we start to go into a consolidative channel like this, like we're seeing here at these purple lines, we see an upward sloping trend channel. And the key is, can we sell around this, right? This is a spot where you can get active and try to add to a position. So if we took some kind of a position up in this area or somewhere on this, somewhere in the progress of this move to the downside, and then we get this upward sloping trend channel, this is where you're going to get the potential for a second wave move. So if anybody knows Elliott wave, and I probably should get a diagram on here with Elliott wave so we can just go through this stuff. The one of the thing the yeah, I'm going to do that for tomorrow. So we'll go through this stuff and kind of, again, I'm not a huge proponent of Elliott wave, but I do think there's something to it, that things do move in waves of 3s and 5s and so forth. And you get these impulsive waves in the direction of a trend. The problem is what time frame again, right? That's why, you know, what time frame are you going to use for your chart? And some people will say, well, you know, it shouldn't really matter. Daily, weekly, and it's true. Daily and weekly could be very similar. 4-hour and daily could be quite similar. Hour and 4-hour could be quite similar. But if you take an hour and you take a weekly, they're not going to be very similar, right? There's going to be a big discrepancy between the shorter time frame and the longer time frame. So anyway, so the point is, if we were thinking we had a potential for a second wave down, right, another wave to the downside, then this consolidative zone in here would have been the perfect place to try to, you know, sell on the rallies, right, up in here, right, look for these rallies, and then try to buy on the dips. Okay, and try to build a position. So if we started off with 1 or 2 positions up in here, 1 or 2 units, okay, and then it comes down, you're trying to take profits somewhere on this move down, you're going to take some kind of profits into the end of the day as the market starts to go sideways, right? Lots of different reasons you could take a profit. And the key is, can you start to add to it and start to build again, right? You know, so if you were lucky enough to take a profit down in this area, let's just say, okay, why would you do that? Because it's a prior low back in here. You know, this is the October 2nd low. So you say, okay, we broke through this low, this low, this low. You could have potentially taken profits at this low right here. Okay, that would have been a reasonable spot, right? Could have taken profits at this low. That would have been reasonable, right? All those different reasons to potentially take profits as we get down to, because markets like to have some memory, right? They like to go down to prior lows, prior high, go up to prior highs and so forth. So anyway, so if someone was, you know, lucky enough to, in paying attention enough, you could take a profit down here. And this works on anything, right? It works on daily charts, weekly charts, works pretty much on anything. Then you get this upward sloping trend channel, right, that kept going and going and going, but it was all night. We had a confluence up near, potential confluence to some prior highs, you know, this prior high, a moving average, this black moving average coming around, and this trend channel, which seemed like it had been intact. And we said right in here, you know, I was selling in here yesterday as the show closed, and and we're looking at this and we're saying, look, here's the thing. There's a chance that we're going to get a second wave down. If we do, this is the perfect spot to take a chance. And if we don't, then we know that we're wrong pretty quickly. And so sure enough, I don't know, 10 minutes after the show, we were over with the show, we start seeing it gap up through that, you know, that circle with the pink inside there. Okay. So we just see it starting to move up in here. So at that point, you're like, okay, this isn't what should be happening, right? The trend channel that has held this whole time is blown away, right? The moving average that we were looking at is blown away. This prior low that we were hoping on back in here, right, is blown away, right? So this low, this moving average, this trend channel, right? That's a confluence of events we're hoping is going to provide some sort of resistance there. And it didn't. Market just smoked right through it. So at that point, you know, for someone who's a trader, you have to say, okay, well, the trend is still to the upside. We have energy built up here, right? We've been talking about that. We have energy built up. The trend on the longer term is clearly still up, right? We're above the 65.74. The trend on the monthly is up. The trend on the weekly is up. The trend on the daily is up. So the trend's up on all these time frames. The question is, can you get a second wave sell-off in here, right? That's what we were looking for, some kind of a push down that would have maybe led to, you know, something like, well, let's just take this as a measured move. It probably wouldn't have worked. It hardly ever works out like this, but let's just take this high down to this low, and then let's take it off of, let's just take what if this area would have held in here, I'm just going to put it where the pink shaded zone is on that circle. Just lay it in there on the top of that trend channel. The size of this move right here, let me just do this with a box. This is getting pretty sloppy on here. But let's take this move, right, that purple shaded zone. And what I did is just took the exact same thing from here down to here, okay? So that would be a measured move, right? So this market's moving within some kind of a daily range, right? Hourly range, some kind of a volatility range. So if this move down, which we really liked, it was definitely some solid selling, steady all day selling. If that's going to continue, and this is the spot where it can continue, and you take a measured move and you say, okay, well, maybe that second wave will be about the same size as that first wave. Usually it's going to be bigger, right? The second wave tends to be bigger than the second wave. So in yeah, this second wave to the downside, right? Which would be wave 3 in Elliott wave. But the point is, if this were to continue, then we would be looking at a move this size or probably bigger, right? So that would have made this for a really good trade, right? You get the first day, you get the sell off, you ride this thing down, you get a consolidation pattern, it rallies up to a point of confluence, multiple points of confluence, right into the open of the trade yesterday. If that selling starts again tomorrow, then we could see a move down into this area, this 6720, which I think we've been talking about as a potential, first area target zone. And if that level could get, and then we would expect some sort of consolidation, probably a little lower than that. But if that were the case, then we would want to see, can we make the fifth wave down, right? And that would be maybe back to that full downside objective at the 65. Let me see if I still have this on here. I think it's this one, this 65.74. Let's see if this has it. Hope this hasn't been erased. It doesn't look like it's on here. Maybe it is. We'll give it a second to fill in. So that's the key, right? Were we going to get a second wave down? Okay, and we were trying to position for that. Why? Because the prior day had looked so good. It looked like we had seen some steady selling and a couple little gimmicks that had gone on. Yeah, this is good, right? So again, that 60, what would it have been? Let me just go and look at this again. I think it's this. Yeah, so let's say 67.20. If this would have been the downside target, we would have come to this. Here it is. Okay, so 67. Yeah, this will work. So the question is, could we have gotten the 67.20 area down in here? Let me go ahead and mark that. There we go. So that's where it would have pushed us. So again, we were here, right? We were right around in that area. Okay, that moved down. We were looking for this, and what did it do? It ended up blowing to the upside and taking out the prior highs. So it's not what we got. But if that consolidation move had worked, we would have pushed potentially down into the 67.20. Why does that matter? It was a point of prior interest. Right, there had been some activity in here. Right, this. You can see all these points where maybe this as well, right in there. Okay, so you could see that would have been an interesting area to see the market retest 67.20. Had it gotten through that 67.20, then we would start to try to reposition again for a potential move down into the 65.74 and a retest of this full upside objective in the harmonic structure. Okay, again, which was getting hit back here in mid to late August, right? This area back in here. So that was the concept behind, at least my thinking on this. So hopefully that's helpful. See if there's anything in here. So we got good morning, Crash and Splash, Jay White. Good morning, Frank. If anybody has any questions on that. So I was positioning for, things looked fairly good for a potential sell-off in this market, some kind of a decent pullback. Didn't happen. The key is minimize the risk. I think, not everyone would be in this situation, but, I think a half an hour in, I was able to turn around and you're basically flat on the day, right? So again, that's the goal, right? Is take these chances. And when you're wrong like that, at least you can minimize the risk, get out of it, and then come back. And, in that case, you're trading it. I was trading it to the upside the rest of the day, which is fine, right? The key here isn't always, sometimes it's great to be right and to make money, but a lot of times being right and making money are two separate things. So that's the point. Okay, so that's our first look at this. The trade that I was looking at yesterday, thinking we had a shot, right, at some of the downside. So let me clear some of this. I'll come back and clear that off. So that's the S&P, right? Makes new highs, continues to make new highs. I think it's the 33rd new record high of the year. So anybody who tries to take a short in this market tends to get burned, right? That's the key. And this is how it can go for a long period of time, right? This market gets on a rampage and it looks like it's going to sell off and then bam, like that, right? You've got a couple key things in place. It's looking fairly good. And then it just takes it out and blows to new highs, right? Blows out, people like me, anybody who's taken a short in this market. And why are we doing that? Well, remember this, we've got this. Here's why I'm doing it. Here's the big reason why. Because again, you don't know when with this particular, so the downside to these, to the overvalued is that we don't know when this is going to happen. All right, so let me flip over to this. I think this will get us there. Okay, so on this S&P, remember, we had that harmonic structure up to the 6574. In the NASDAQ, it was, we'll look at the NASDAQ here in a second. But here's why, is that we're seeing this massive amount of overvalued in these markets. All right, I'll highlight, hopefully I can highlight this thing in red. There we go. Okay, so that's the S&P. You can see the red up in here, right? This is a daily time frame, pretty deeply overvalued. This was the weekly time frame overvalued and the monthly overvalued. So when you see a setup like that, and you can see the same thing over here in the NASDAQ, I'll go ahead and light that up now so you can see that. So there's the red. So those were the two things we're watching, the S&P and the NASDAQ, okay? Now, it didn't work. Does it mean I'm probably going to come back and try it again at some point, because I just know that this deeply overvalued, and what you would love to see is some sort of a positive event, okay, that draws, like this, a new high. We know we're in the zone, right? You're in a range where there's a good chance, right? A very good chance when you look at this overvalued, right? When we look at this, I don't know if I've seen that, over 30 years, I've probably seen that, I don't know, 10 to 12 times, maybe something that overvalued on the stock market, on the U.S. equities. So this is a pretty rare, it's not super rare, but it's a pretty rare event. It doesn't happen all the time, and it tends to lead to something significant, right? It might take a while, but because we have it on the monthly, if it was just on the monthly, I would say, this could be a month, 3 months, 6 months, something like that. When it's on the weekly, I would say, well, it could be a week, 3 weeks, 6 weeks, something like that, somewhere in that time frame. When it's on the daily, you say, well, it could be any day to a week to, 2 weeks, 3 weeks, something like that. Usually on the daily, you're going to see some kind of a sell-off. So that's the question. Is that the sell-off that we saw? This one right here. Was that enough to burn this off right there? Okay, burn off that daily. Probably not quite. But another wave down maybe would have. So now you say, okay, take some profits, see what happens, sit tight, maybe just get out, maybe even get long again with the idea that the market's going to go up and try to make new highs. And then the weekly sort of kicks in, right? So can it cascade from the daily to the weekly to the monthly, where that's an ideal situation where you're like, okay, we've got this overvalued stacked up. We take a look at the daily, we get a sell-off, right? We take the trade, trade around the idea, let it get down to the point where people now start getting scared. It's probably some kind of a short-term swing bottom. Market pushes up. Then you start in on the weekly time frame. You're saying, okay, now I'm looking at 1 to 3 to 6 weeks. Okay, so now you take a little bit longer stance. And then we work on the weekly, right? Should be something more significant than the daily would have been. And then if that starts to work, we look over to the monthly, and the monthly could take 1 to 3 to 6 months. It could be, again, there's always a chance that it's a major top, right? Or, I guess there's always a chance it's the top, but the problem with that is that's, you're trying to pick a needle in a haystack there. So that was the key, right? Trying to look at this. And so that's why I'm looking at the shorter term, thinking that spot where that pink circle is at, right up in this area. Let me just mark this with, I'll just mark it with another big ellipse. Oh, hopefully. Oh, I just screwed that up. Let me just put a big circle here, right there. So that's what I was looking at, is that zone right there up against essentially where that, let me just clean this up. All right. I would say, let me just put it across there like that. So right in that range, right where that thing crosses, right in that area, right in this zone right in here. That's what I was looking for, is a low risk spot to take a chance. If you're not right, you get out quick. But if you're right, now you want to just continue to sit tight with that thing and trade around that core concept. So that's how I do this, right? That's how I break this down in terms of the daily, weekly, monthly. When we get something this overvalued, it looked pretty good. The right components were there. You take a chance. It doesn't work. It blows through, makes new highs. Surprise, surprise. 33rd time it's done that this year. Okay, so essentially what are we? 35 to 40 weeks into the year. What do we have? Another 12 weeks, so 52. So 40 weeks into the year. So almost, if you figure that 40 weeks into 2025 and 33 times it's made new highs, it's not perfect because sometimes it's making, 2 or 3 new highs in a week. But essentially every week, this market's made new highs this year. Now, remember, we also had the Liberation Day, the April lows, right? So there wasn't any new highs going on then. And that's why this thing gets skewed. But generally speaking, 33 new highs over 40 weeks, you can say it's pretty steadily made new highs all year. And especially since those April lows, right? This thing's just been on a tear, okay? All right. And, a lot of this is the economic policy, right? We're going to get into that a little bit today. All right. So that's the S&P. We've broken that one down pretty good. Let's take a look at this Dow. So you can see this Dow. This is a monthly chart on the Dow. And this goes back to the mid 80s. Okay, so you can see over here on the right or over here on the left, this is like early 1980s right here. And, we get, into the late 90s and you can see a couple blips in here, right? This is the 2008 real estate crisis. Okay, never came back to trend. You can see this is COVID. Okay, sort of came back to trend, but never came back to this turquoise trend. All right, at some point the market will come back and touch this. Could be 10 years from now, 15 years from now, who knows, right? You can see we have some kind of a projection out here, that looks like, and there's a lot of time frames around 2032, so I wouldn't put that out of the equation. Something like this right in here, something like that. And that's why we're looking for some potential, marking of the high. Now, if the tariffs and all these things that are taking place, is President Trump's agenda going to lead to a continued rally? These markets are getting really extended. The stock market's extremely extended, right? Same thing with gold, same thing with a lot of these markets. And the question is, what's going on? Are we going to see a big, where all this stuff gets rectified quickly? Or, is there going to be some event where this stuff where these things get, they come back to some sort of an average? I mean, that's a big question for me. In the meantime, we just have to look for tiny little things, right? You just chisel away at it every single, chisel away at it regularly. At least that's how I do it, right? I try to chisel away at it and try to, if you lose perspective of the longer term and you get onto some, if you get caught up in doing something that's working, right? You get into a range and you're like, okay, here's what I do. I just trade this range every day. If you can lose the forest for the trees, right? And the trees for the forest. It goes both ways. You can get too focused in on the minutia that you don't see a bigger picture, and you can get too focused in on the bigger picture that you'd get destroyed before it ever comes to pass. Okay, so the key is to try to survive with the idea that these markets are probably going to have to go sideways to down at some point. And when is that? When is that point? And we see this AI bubble building. Okay, the question is it a bubble or is it not a bubble? Well, when we see the shenanigans we see yesterday with this XAI and this NVIDIA, and I've started putting together a real breakdown on this. We'll probably go through it tomorrow because I really want to break that down and show, what these guys are doing. It's like, it's almost funny because NVIDIA is taking its profits and giving them to XAI, right? XAI is taking those profits as a loan, as an equity stake, and then they're reinvesting it in more NVIDIA chips. So it's almost a circular reference. So NVIDIA is it's almost like they're becoming a bank, but it's more convoluted than that even. All right. And so we need to watch these structures for a lot of different reasons that these guys are putting together, because it just feels like they're getting on shaky ground. Now that can go on for years, right? And so, but that's why I look at some of these chances, just a simple little trade to the downside, and we didn't get it. All right, so let's keep rolling here. Let's keep going to the Dow. So that's the Dow on the monthly. Let's look at this on the weekly. Okay, so you can see pretty steady, right? Pretty nice moves up. No divergence, nothing showing up yet. We did get a little bit, there was a little bit of divergence back in here, it looks like. And then we get a little bit of a sell-off, can't break to new lows, then it goes up. This would have been back in 2023. That's about it, really. This was COVID back in here on the weekly time frame. It did come back to the trend. So you can see this was kind of a nice pullback on the equities right here. COVID was a perfect pullback to the trend, right? That gold trend, that gold moving average. So it was a perfect pullback. And, same thing happened. I remember this in the Dow. I can remember sitting there at I think it was 18,100 and something. I was like, this looks like a low. And then I happened to catch this and looked at this moving average, and you're like, okay, and you catch the bottom, but you just didn't think that this was going to be the move out of here, right? And it's even more pronounced on the NASDAQ, which we'll take a look at here in a second. Then if we look at the daily on this Dow, this is what we've been watching, right? The prior highs, this purple shaded zone. We had these two prior highs back in here, November of 2024, February of 2025. And then we get the sell off again, back to the trend. Okay. In this 39,042. This must have been, this was an old harmonic structure too, right? That white dashed line. I can't remember when that was from. I think that would have been, that was probably from, that was late 2023. I think that was the move, that was the upside objective on a move, this move back in here, right? This 39,042. And you could see, it traded around that quite a while before it proceeded higher. So no surprise that it came back to test that. That's what we're looking for again here, right? 65.74 in the S&P. Will it come back and retest it like this retested? It's 39,042, an old residual harmonic structure. Okay, so, but here's the key, right? This is the real takeaway. The Dow is breaking the new highs, okay, clearly, and it looks pretty strong, right? It struggled. It really did struggle here for quite some time. While the S&P and the NASDAQ were going higher, Dow just kept hanging out here, and it really wasn't pushing through. And then finally, it spent some time in here in this circle. Let me just change that. I need to come up with some better colors here. Right in this zone, you can see right around in that zone, it spent some time going sideways, built some energy, and then obviously it pushed through to new highs. Okay, we know the composition of these different things. S&P is a good broad measure. The Dow is Dow 30, so big names that most people around the world know. So it can be a capital flow. If people are getting scared around the world, where are they going to go? They go to the big names in the U.S., right? It's a safety play. If you want equity exposure and you're coming from overseas, they tend to go to, if you're going to the public markets, right? Not the private markets. If you're going to the public markets, the stock markets, then the Dow is a good place to go. It's a lot of times a recipient of money that's flowing to somewhere else, right? Flight of capital, right? So that's why we watch this Dow. Okay, so I think we're pretty good on that one. Let's take a look at this NASDAQ. So this is the NASDAQ harmonic structure, right? This 24,165, that white dashed line. Okay, again, will it come back and test this? Will it come back and test this zone right there, the 24,165, the white dashed line? It looks pretty strong, right? It looks pretty strong. It just keeps making new highs, just keeps edging higher and higher and higher and higher. Things can change quickly, but right now, look, the trend is up, clearly up on this thing. We've got the daily. Let's take a look at the daily. The daily trend is clearly up. The weekly trend is clearly up. Monthly trend is clearly up, right? So monthly, weekly, daily, the trend is up. The momentum is strong. It's hard to fight these markets, right? It really is hard to fight these markets, but it's very tough to, so the key is to have a holding, right? If you have an allocation to stocks, an allocation to bonds, an allocation to these different things, and then you can be active in certain other places, with this, at some point, right, the odds are high that this AI, is going to run into headwinds because they're spending a lot of money. We know that they're getting usage, right? This is what we know about the AI, this revolution is, they've taken this large language model and they've been able to amp it up, right? Put it on steroids, give it a turbo boost with all these new chips and so forth, okay? And the ability to link all these things and put them in data centers and the ability to, aggregate this data, store tons of data. So they're storing tons of data. They're computing lots of data. They're taking lots of information. They figured out how to do that, take these large language models, feed this stuff in, and then they're able to pretty quickly extract out a result from a command prompt, right? A question, right? A query. So it's pretty good, and people are actually starting to watch this stuff, right, and use it, right? Where you can see the usage is going up like 50x, right? So people are using this stuff. The question is, if they're not going to use an ad-based model, okay, like Google or these others, right, then how are they going to get revenues from this? That's the big question, but they're spending tons and tons and tons to continue driving forward on this AI front, and yet they're trying to use a different revenue model. And the question is, what are they doing? Do they even care, right? Well, they're going to have to care to some degree. And here's the other question that I want to throw out there. Is a couple of weeks ago, we talked about this with President Trump when he said he wanted to extend the earnings announcements to 2 times a year versus 4 times a year. So rather than being every quarter, he's talking about, extending this out to twice a year, maybe even once a year. Well, what does that do? It allows for accounting irregularities, right? Things that can go on. And so if you're trying to extend this AI, if there's something nefarious going on here, what would you want to do is not have to report as often. Okay. So with that in mind, how are they going to make the revenues? That's the question. They know they're seeing eyeballs, right? People are willing to use this stuff. They're liking the results of it. They're going to it. They're using their AI platform of choice. And there's a handful of major ones out there. When they do that, how are they going to earn the revenues from this? That's a big question. Okay. That's what we don't know yet. I'm sure they know, right? I'm sure that they haven't done this without some sort of what is their outcome, right? They know what their outcome is. Is it massive profits, massive revenues, or is it essentially this technocracy, right, that I keep bringing up? Okay, so that's the NASDAQ. This is the shorter term, right, the harmonic structure, 24,165. We can start taking some projections off of this stuff. I mean, if we wanted to throw one out there, we could take this, use the actual full upside objective on the harmonic structure, pick this prior low right here. Okay, there's a 1618. You can see it sort of stopped there a couple times and then it blew through. Okay, so then you can say, okay, what about a 2618? Well, now you're talking 26,000. Okay, that red line up there. Now you're looking at 26,000 for a 2618 extension. So if this market's in a major expansion mode, and it appears that it is, then that's what we're looking at, potentially 26,000, big psychological level. What would that mean for the Dow? Would that mean 50,000 in the Dow as well? So could you see 26,000 for a big psychological level in the NASDAQ, 50,000 in the Dow, and maybe, I don't know, what would that equate to in the S&P? I'm not even sure. Maybe 7,500, 8,000, something like that. Not sure. I don't know what that would equate to. We could do that at some point. Again, it's no reason to put the cart before the horse. We're just throwing out wild numbers now. 26,000 looks like a Fibonacci expansion level that we could be looking at in this NASDAQ. Okay, let's take a look at this Russell 2000. All right, so this is the weekly. Here's the daily. Let's take a look at this daily. Now let's look at the weekly first. All right, so this is a bare bones again chart. So let's just take these prior highs back in here. Push this across, okay? And you can see we've had multiple highs up in here where it's tried to retest it. I'd say this one too, this one, right? This one, okay? So 1, 2, I'd say three tests of this high, right? Which is in the 2,340 area, all right? That's what and so what is a Russell? Russell's all the small to medium cap stocks in the US, okay? You can see it's pressing on to new highs. This is broadening out. This is what we've been looking to see. So is this yesterday? This is probably the last couple days. So right now, everything, the S&P breaks to new highs. The Dow's breaking to new highs. The NASDAQ, S&P, Dow, and now the Russell, right? It's now broken out to new highs. So this is a good sign in the sense that, people are finding value in the small cap place, okay, in the small cap space. And this is a broadening out of the market, potentially, okay? So lots of reasons yesterday that this market could have held there, could have seen a second wave down, but it didn't. It just blew right through there. Okay, and so now we're looking at this Russell. This is what we wanted to see, right? Some sort of follow through in the Russell. If this thing can stay above this area, right, that purple shaded zone, then this is a good sign that these markets have a lot more upside, right? Again, NASDAQ 26,000, Dow 26,000. Yeah, 26,000, 50,000 Dow potentially, right? These big psychological levels. And let me go back to this Dow real quickly. We talked about this. If this Dow can break, I think if this Dow can break above, like let's say, so here's 50,000. Doesn't look very far away at this point, right up in here. So if this thing can break this 48,000, let me just put a line in there instead. 48.2, let's call it right there. I say if this Dow, here we go, 48.2. There we go. Okay, so where this pink line is at, so if the Dow can break above this, it's almost like this Dow's on a downhill slope to 50,000, right? It's within range for people to pile in. So look where we're at. We're coming into, mid-October now. And let's say that it crests 48,000 by, the end of October. Now you're starting to get into the holiday window, right? You're starting to get into the Santa Claus rally, when we know historically and seasonally markets like to rally. So, and who knows what else is going to go on in terms of other, what if there's a lot of what ifs, right? With President Trump, can they, we see this Israeli peace deal. We can be positive about that, and we can look at the history of how we got to here, with Israel and Hamas and the stand down and so forth. So we can look at that from whatever lens we want. If we look at it from a positive angle and say, okay, that's great. We got peace in the Middle East now. Is that positive for stock markets? Okay, what about Russia? Can we push that thing off a little while? Can we patch this stuff up in France? Can we patch this stuff up with Japan, right? This Takaichi. Can we go over there, have a meeting at the end of October, patch things up with Japan, kick the can down the road? Because we're not solving the problems of the debt, right? We're not solving any debt problems. The key is we're just keep kicking the can down the road. So if we get into this window of time and we see some of these positive things happen and we crest this 48,200, that's kind of again, that's just a gut feel. That now all of a sudden, all these fund managers are like, look, that 50,000 is within reach. We need a gun for that. So they start loading up the leverage, right? And they start driving toward this 50,000, and then I think the 26,000, the NASDAQ is sort of a side factor. It would be another psychological level, but I don't think that's what they're driving for. I think this Dow would be because why? People know the Dow, right? Everybody knows the Dow. So when someone says, wow, 50,000 in the Dow, that's amazing, right? That would be the biggest of all the indexes. That's the biggest psychological one, right? So that's what we'd be watching for. So again, willing to take shorts. I'm willing to take chances on the short side, or at least I was, right? Because of this deep overvalued that I just showed you. It didn't work, right? And now we're in this position where it's like, look, any higher, this market continues, and it's going to gun. That 50,000 is the big target, I think, in the Dow, right? That's the thing to look at. The Russell's following suit, and we have a line in the sand with it, right? That's the beauty of this thing. If we look at this, if it continues to advance higher, if it ever comes back to that level and it breaks through those prior highs, now something's broken, right? You're like, okay, it should have held above here, right? If it had real legs to it, it should have held above here. So that's why we take these longer term views, right? So hopefully, again, looking at the S&P, took a chance, didn't work, on to new highs, 33rd record high of the year. Dow was really struggling as the NASDAQ and the S&P were trying to fulfill their full upside objectives. Not only did they fulfill their upside objectives, they blew through, and then the Dow started to participate, right? The Dow's been participating for a couple weeks now. We've been talking about that, and now what are we seeing? We're seeing the Russell start to participate, right? So the small and mid cap are starting to participate. So money has to be coming off the sidelines, right? Because it just doesn't come from nowhere. So it has to be coming off the sidelines and coming into these markets. And that's what we want to watch, right? The leadership. What's the leadership? Does it continue to be the NASDAQ? Does the Russell start to take command, right, and push higher? Does the Dow start to take command? So hopefully that gives us a decent look at the overall. And then let's take a look at this. Let's go quickly and look at, here's the Nikkei, the Japanese stock market. I wish I had this cleaned up a little bit better. All right, clear this off there. Okay, there's that. And then I want to get this off of there. Okay, so what we're looking at here is this high back in here in 1989, December of 1989, end of the year. Okay, then we get, this big long-term, sell-off, a couple big flushes down, right? The Nikkei really fell apart. 1, 2 big waves down, and you can sort of see this. Here's a. Well, let's just show you this. I'll show you what this looks like since we're here and we were talking about these Elliott waves. So this is the first wave down. Okay, let me put this in a rectangle. So here's the first wave down on this pattern, right back in here, and then you get a little bit of a correction. Okay, so you'd call this as a 1 down to here, then a rally is the 2 wave, and then you see this third wave down back in here. Okay, pretty good size move, big move down in that, and you see a corrective pattern. Okay, back up to this yellow circle, 4, and then you see a 5, right? This thing moves all the way down to here. Okay, so this is back in 1989. So you can see this 5-wave pattern. And then what does it do? Then this is pretty typical of what would happen, what you would expect. Then it goes sideways and is choppy. Then you call that, kind of a corrective phase or an XYZ pattern, whatever. It gets into all these crazy things. The point is you can see that. One wave down and a little bit of a consolidation. Second wave down, a little bit of a consolidation. Third wave down. That's it. Market goes sideways. That's a pretty typical pattern when you see an impulsive market that's moving in a direction. Okay. So after that, really, that was it. That was pretty much it. After that, the Nikkei pretty much went sideways, for, this whole period of time from 1996, let's just say 1995 to 1996, all the way until really, since, till Trump 1.0 was over and Biden came in. The Nikkei was just sitting here at 20,000 and then it broke out, right? And then it makes a wave up. And you could probably put this wave 1, wave 2, wave 3, wave 4, and now it's in wave 5 potentially, right? You can kind of see this 1, 2, 3, 4, 5. So 3 waves up. And we look like we're in this potential third wave up. The key is we broke through this prior high from 1989. Okay, so this thing's on fire. And it ran into a lot of headache there, right? We saw the carry trade in August of 2024 blow up, right? Big sharp move in the Nikkei, just huge move down, then a huge move right back up again. So the key is people want these equities, right, around the world. All right, let's take a look at this one. This is the this is the DAX. All right, the DAX, this thing was linear all the way, nice move up all the way since, what was this, 1996 back in here. So this is 1996. Right, we start this move up in the DAX, the German DAX. Market starts to move up, nice, linear pattern, growth, right? Market's moving. Dips, rallies. You can see, as it moves through time. Then in 2022, we hit this last low back in here, right? And then it breaks out here in 2023, and it just goes nonlinear, right? The thing starts to go through the roof. And so you have to ask yourself why, right? When Germany continues to weaken, okay, and we see their real strength, the automotive industry, which we talked a little bit about yesterday with BMW. We see it pervasively. It's coming through, more headlines on that today. We see, you can talk about that every day. There's almost always a headline you can pull from the manufacturing base, something going wrong in Germany, right? But the point is, what is it with this? I mean, why this thing in this green box? Why the acceleration when the economy's weakening? And is it because all the credit, right? Is it because we just keep running up credit? Germany, knew they were in trouble. They knew that Frederick Mayers comes in and they sort of know that, like, we have to do something, right? We're going to have to start printing a bunch of money. And so that's what they do, right? They know that they can do it. They just need the right scenario and the right personnel to pull this off. And so that's what they did, right? They took off what's called their debt brake. People probably anticipated that, right? People, lobbyists, whoever influences this stuff was probably already saying, look, don't worry. As soon as Germany gets in trouble, we're just going to take off the debt brake and we'll just have them, print a bunch of money, run their debt to GDP ratio up a little bit more, and, we'll pump it into the system. But if that's the case, why does the money go to the German DAX, right? Why is the money coming into the stock market, right? Why is it going nonlinear, right? It took this nice linear path for this whole period of time, and now it's going nonlinear. Just big questions that we have to sort out. Why is this going on? And I can come up with a lot of potential reasons, and I probably should, right? I probably come up 20 potential reasons. Some of them would be terrible ideas. Some of them would be decent ideas. Some of them might even be reasonably good ideas. The point is, something's going on here, that you're breaking from a 25-year pattern into a nonlinear thing as the economy's getting weaker, okay? So why are people piling into the stock market when the economy's weakening? It's a big question. All right. And then I think we're good on that stuff. I just wanted to look at these things. I did add this one. Well, do I have that one in here? 13. No, we'll come back to that. I did add so this is the Euro Stocks Index. We could take a quick look at this. I haven't looked at this one in a while. Let me just look at this real quickly since we're doing this stuff. So you can see this is a monthly on the Euro Stock. So this is the Euro Stox 50. So this is a broad measure of Europe stocks, European stocks. So not country specific, European specific. All right. And you can see that it's near its, this was, let me get the time frame on this. Okay, this was 2000. when this thing came into inception, which makes sense, right? That's about when the euro came about to be. And so this is 2000. So this lines up really closely with the formation of the euro. All right. Okay, so then we get this high at what, 54.68, and is again kind of like that, the Nikkei, right? Sells off. Not the same pretty pattern, although you can find a three-wave pattern. 1, 2, 3, 4, 5. So you can find that three waves down if you look in here close enough. Right? So you can see it down, up, down, up, and down again, and then kind of a sideways choppy pattern. And that ends so again, 1 push down, 2 pushes down, 3 pushes down. All right. Anyway, then the market goes sideways for a long time, starts to grind higher, and now it's retesting this high, and it's potentially breaking out, right, at this 5,500 level. So there's the Euro stock. So we can look at these things. The Swiss Market Index, I've been watching that one too. I just got that one up, so we can watch that one along with the Swiss franc as this thing tries to unfold. So that's a lot of stuff on the stocks. Wow, I can't believe we spent 45 minutes on that. But I wanted to go through yesterday's trade, and I wanted to go through the concept behind it, right? This deep overvalued situation, okay, from a sentiment perspective, right? People think this market's going higher. Lots and lots and lots. Almost everyone thinks this market's going higher. When that happens, it tends to mark a top. Now, there's money on the sidelines. Money on the sidelines needs to come in. And why are we going from this linear to nonlinear, like in that German DAX? Why is the Nikkei breaking new highs after we know that they're struggling, right? From a governmental, political, and a central bank perspective. Why is it doing that? When the U.S. is breaking out, we can see a little bit more of a reason why, right? We're getting all the foreign direct investment, right? We're trying to lead this AGI, right? Artificial general intelligence. And again, we're the most productive country in the world, right? From a large perspective, large countries. And so you can sort of see it here, and we're watching the evolution of this, right? Again, this Russell coming through and starting to make new highs. We're seeing the broadening out of that. All right. But when you see these other countries, you have to me, it's inflation's one reason, right? Inflationary pressures, but we're not convinced of that either, right? We're seeing deflation coming out of China. Is that about to end? But here's the problem. I mean, here's the problem with that. If inflation's going to continue to go, right, on the upside, then what is that going to mean, right? That means the Fed's not going to be cutting rates. That means they probably have to be raising rates, assuming that the Fed even matters, right? And so we get into this battle, and that's where I wanted to get to today, was with this battle between, again, looking at the economic data that we're going to look at here again, is pairing up this jobs and the inflation, right? Those are the two things the Fed has to contend with. And really the economy has to contend with, right? You need to keep people employed because why? You got to keep the consumption engine going. You want to try to control the inflation because why? It allows people to spend. Here's the perfect situation. They want to have inflation at that 1 to 2 to 3% range, right? That way people can sort of hang on, keep up with it. We, the people, can sort of hang on. They continue to rip us off, right? It continues to allow them to inflate away the debt, right? So even though they add more debt that we never have any intentions of paying back, then they can add more debt to it, and they still, they can inflate it away, right? So as inflation goes, the GDP grows just because of inflation, and the debt seems to either stay stable or doesn't grow as fast as it appears to, but it's really growing incredibly fast because it's the debt that's feeding the inflation, right? So again, it's just like we're seeing with NVIDIA and XAI, right? This circular reference where you print the money, you pump it back in the system, that creates the inflation, which allows you to inflate away the debt, which allows you to create more debt, which allows you to put it back in the system, which allows you to inflate it away, right? And you just go round and round and round and round and round, creating more debt, creating more inflation, inflating away that debt to make it tolerable or at least appear tolerable, and you just go round and round and round. And that's what we're starting to see with this AI, right? With NVIDIA and XAI. And like I said, I'm going to put a diagram together on that here in the next day or two. I've been working on it. It's just a little bit harder. It's just tough to fit everything in. There's so much stuff that it's tough to fit it on one screen that everyone can see. So, all right, let's jump over here and take a look at the economic data. I want to go through some of this stuff. See if that works. Okay. Oh, that's not working. I don't know what happened there. We'll just have to do it manually. All right, here we go. Okay, so again, this week was about Federal Reserve speaking. Day 9 of the government shutdown, so that continues. And so again, key things today, lots of Fed speak, right? We'll take a look at that here. We'll see that here in a second. So let's take a look at this here. All right, there we go. Okay. All right, starting at 9:20 today, we get FOMC, Muslim, Barr, Goolsbee, Logan, Kashkari, and Barr speaking. I think Barr speaks twice. Okay, then, so again, this is what we're talking about. Lots and lots of Fed speak this week. Lots and lots of talk around rate cuts to finish out this year. The market's going to love it if it knows for sure that it's got a rate cut coming the end of October and another rate cut coming in December, right? This just feeds into this whole frenzy, right? Continue buying, right? The Fed's got your back. You know, the administration is, you know, doing what it does, right? I mean, again, putting out growth, Delta, I want to talk about that here in a second. You know, the earnings just came out this morning, and it's great, right? The numbers are great and everything, but you have to ask yourself some of these questions. Things just don't add up, all right? Okay. But I'll come back to that in a second. So we've got the crude oil inventories came in a bigger build than expected. So again, negative for crude oil. That's what we've been talking about with crude oil below that 63.18 continues to be pressure to the downside. So again, 63.18 is that line in the sand. And we're hearing talk of the analysts out there from the IEAE and all these others saying they expect to see a $50 print in the near future. So not $50, but $59.99 or $59.80, something like that, something in the 50s. And that's no surprise to us, right? We've been watching the headlines from these people, a lot of the people over in Europe talking about this stuff, okay, covering that pretty extensively, right? Continue to talk about the downside to flat, sideways to downward pressure on this crude oil, right? I think we've hammered that one pretty good. So again, this just fits right into that fold. We get the U.S. 10-year note auction slightly negative yesterday. So again, it was expected at 4.03% yield. It came in at 4.12, so a little bit higher than expected. And the bid to cover was worse than expected. They expected a 2.7 bid to cover ratio, came in at 2.5. Not as many people showing up. So that makes sense, right? Higher yields, not as many people showing up. And that's how they satisfy it. You got to offer more return to get the debt auction to go off. So again, not a great sign, right? The FOMC meeting minutes. Here's the takeaway on this thing, right? We're showing a large dispersion of opinions, okay? And of course, caution due to inflation concerns, right? So this is that battle this is going to be the battle, right? Right now there's a bias toward the labor market, okay? And that's why they're saying we're going to get these rate cuts, right? So if your bias is toward inflation, you're probably not going to do any rate cuts the rest of this year because inflation isn't under control. It's higher than the 2% target. It's higher than 3%. Okay. I still think there's an overlying deflationary force out there in the world because of innovation, productivity, China, all these things that factor into the deflation. But the inflation that matters to the consumer is still there. And it could be getting higher with the tariffs, right? Again, so far, so good. And tariffs haven't created inflation, but less and less people are talking about that now, right? So before everyone was talking about, tariffs are going to cause inflation. Now that they're all subsiding and we start to see the tariffs come through and we start to see things starting to crack, right? Now hopefully we'll get to this today. We're starting to see things cracking and we're looking for you can't add tariffs like this and it impacts no one. Something's going to crack from this, okay? It might generally overall be good and it might be a positive move, but you can't do this without something cracking, okay? And we're starting to see signs of something potentially cracking here with this bankruptcy that we saw in, I forget the name of the company off the top of my head, but we just, First Brands, right? First Brands, right? This is one of these aggregators of Chinese products. They make things like Reese hitches, a lot of automotive type stuff, right? They're a conglomerate that holds a bunch of different, they acquire different companies, right? And they bring a lot of stuff in from China, and we're starting to see them. I'll just cover that now. We might as well hit it while we're doing this. So there's essentially what happened is they filed for bankruptcy a couple weeks ago, a month ago. We talked about this, and then what we're seeing is there's $2.3 billion missing, okay? The court filings, the creditors are claiming that. Then the court filings are suggesting about $2 billion of collateral missing, okay? So why do we care? Well, almost all their stuff comes from China. Are the tariff deals having an impact here, right? Is it squeezing these importers, okay? And then are they having to try to meet earnings, right? Meet expectations, satisfy their investors, and they're having to cheat, right? So that's the question here. So, and I think that's good enough, right? I wanted to make sure that we covered that because no one's not no one. It's the coverage on the potential tariffs being inflationary is subsiding. Everybody was on this really since President Trump won office, almost a year ago now. And then by the time he took office in January, and then he started in pretty quickly on the tariffs, and everyone said this was going to be inflationary, and it hasn't been, okay? But at some point it might be, right? They might have been early, okay? So that's what we're watching for. So if you think that inflation is a problem, you're not going to be cutting rates. If you're focused on jobs, okay? If you're focused on inflation, you're not cutting rates. If you're focused on jobs, you're probably cutting rates, okay? So what do we see? We don't see jobs data coming through because of the government shutdown, right? So what is it? It lends to rate cuts going into the end of the year based off jobs. Now, what happens when we turn the year, right? If we get this big run up and this drive toward 50,000 in the Dow, and we start to see inflation, and the focus changes from jobs to inflation because it starts to get a little bit out of control for the consumer, okay? Now we could start to see a different tune, all right? Always what ifs, and look, here's the thing. So far to date, the best thing you could do is literally just go to work, take your money, pile it into a 401k, put it in the S&P, put it in the cheapest index you can find because the thing doesn't think, it doesn't question valuations, it doesn't question technicals, it doesn't question harmonics, it doesn't question anything. And the thing's just going, and all these stock markets around the world are going through the roof. But the problem is at some point, the music will stop, and look at that DAX, right? It breaks outside that linear pattern. It goes into the green box. Economy's weak, and yet the stock market's going through the roof. Okay, is all the debt that's being created looking for a home? These are the things we have to ask. We just don't know the answers to. But the point is, probably going to get these rate cuts at the end of the year because they're focused on the jobs. All right. Let me go into this. Speaking of the Fed, the search is on, as we suspected, come mid-October to November. I think there's 11 candidates in the mix for the new Fed chair. They're working hard and heavy on this. There's really probably, they say there's 11 in the hopper, but there's really probably just two, Kevin Hassett and Kevin Warsh. Those are the two most likely candidates. Could be an outside, President Trump's pretty good at outliers. So you never know. We could get someone, a selection. But I think if I had to guess, I would say it's going to be Kevin Warsh, right? All things lead to Kevin Warsh to me. Okay, that was just a little side note. And then let's see here. Anything else I wanted to cover on this? Man, I can't believe this thing isn't working. Okay. All right. And then let's see. Let's wrap up this. Let me just wrap up this economic data. So we've got the Fed Chair Powell, speaking of the Fed Chair Powell speaks today. Probably one of his last big speaking engagements other than the two rate announcements that are coming in October and December. And then he's pretty much out the door. And then Bowman will speak today. So those were yesterday's, all those FOMC speakers. So we have two today. We had like 5 or 6 yesterday. And then natural gas storage will be out today. And then what we're watching too is this U.S. 30-year bond auction. All right. That gets us through our economic data. I wanted to make sure we got through that. Okay. Now we can get on to these headlines. Government shut day down 9. Okay. Now we're on to this Delta. I want to hit this quickly. So Delta reported, and their earnings were expected at $1.52 a share. Came out at $1.71 a share, $1.71. So a beat. Revenues were expected at $15.8 billion. Actually came in at $16.7 billion. So another beat. All right. So over the past 6 weeks, sales trends have accelerated across all geographies and in the advance purchase window. And not only so basically people buying tickets out into the future. All right. Same kind of a thing, right? They're planning trips, right? So the supposed driver of these earnings is the leisure travel, paying up for better seats. Okay. The question is there really such a thing, better seats on a plane? You either have the business class or the first class, and then everything else is pretty much the same, in my opinion, other than the ones by the wings, right? The exit windows. so then we say, and so it's 90% of travel related analysts are seeing steady demand into 2026. Okay, so that fits with this. And the question is the labor market again, right? Back to the labor market. So the story that the consumer needs help, right? That's why we're cutting rates, right? Is because the consumer needs help because of jobs, right? The problem is Delta's earnings don't really say that. We look at these corporate fares, right, to go transatlantic now, the business class, right? The business class and the first class, it's like $10,000 to $14,000 for a ticket now, right, to go transatlantic, US to Europe. So the fares are high, right? The corporations aren't really struggling if you're spending that amount on fares. And we're seeing people upgrading, right, whenever they can for whatever reason. So there's a disconnect here again, right? We're cutting rates because of jobs, but it seems fine, right? The demand for airlines seems fine. People seem to be willing to travel. So again, something's not adding up here, right? Okay, and then and boy, I really want to get into this. Yeah, I do want to get into this. So we've got let's go. Okay, so we've been talking about this dollar, and the dollar is, let me see if I can get this, see if there's any questions in the chat here. Okay. The dollar, we've been talking about this, right? If the dollar can break, and I might as well just pull the chart up here. Let's take a look at the dollar. Okay. And this is what I think we were looking at here. Yeah. Okay. So if the dollar could break above this purple shaded zone, this prior point of resistance, and climb above there, then it's making progress, right? That's step one, right? It's making progress toward the upside, okay? Even though everybody shoots it down, right? Again, we saw Ken Griffin, Ray Dalio, two big figureheads come out trashing the dollar this week and last week, and pretty much continually, okay? But the dollar makes an advance here, right? Now, what are we looking at on this? If we look at this, so now the next big target is, can this thing make a run up to this purple line at basically 100, right? 100 on this index. Okay, it's making an advance. It cleared that green line, right? The moving average down in here, it cleared it. Okay, and it's holding above that now. That's kind of a line in the sand. Can it hold above that green line, right? Moving average. If it does, then that green line is going to start to flatten out and it'll start to turn up over time. Okay, this is on a daily time frame. All right. And you can see there's a pretty easy move, I think, up into this area. Let me just put this on here. And I'll explain why this matters here in a second, why we're doing this. Okay. So let's just say, this moving average, this black moving average comes around, and this green moving average starts to come up. Okay. These things like to crisscross. They meet, back and forth over time, unless you're in a really strong trend, right? Like gold. They don't meet when you're in gold or even in stocks. Even in stocks, they're going to crisscross. You can also see an energy build taking place in here. All right. I think we've been looking at that. Okay, let me just turn that so you can see it. Okay. So we got an energy build. We're above the green moving average. It's the beginnings of a potential trend on the upside. Okay. Again, we're out on a limb. Very few people, well, put it this way. The media has been knocking this thing down eternally. Okay. Here's the thing though. This is why I bring this up, is the last 3 days we've seen, okay, funds in Europe and Asia have been ramping up their option trades this week based on the view that the euro and the yen will weaken against the dollar, okay, as we go into the end of this year. So they've been the volume on the upside of these options, the December options are 3 times the trading volume on the bullish side as they are on the bearish side. So this is people making bets, or at least protecting themselves against currency exposure going into the end of the year. All right. So the media is going to continue to shoot this thing down, but behind the scenes, the option trades are coming through and they're making bullish bets 3 times more than the bearish side. Okay. And this is just happening over the last few days. All right. So that's why I wanted to point this dollar out, because again, this is part of the catalyst that could potentially propel this thing up to that 100 in the index. And it gives us some staying power in the end of the year. And why are they doing the options? Because they don't have to think about it, right? It's an upfront bet. They put their money on the table. They don't have to manage the trade. And if it, climbs and it gets above their strike price, then they're happy and they've made money on the trade, or it's hedged their exposure that they're looking to hedge. Okay. So there's a little side note, right? We've been talking about this dollar, and there's an update on it that starts to give us backdrop for the technicals and so forth for a potential move higher in that dollar. All right. Okay, another headline. Let me go back to this, and we'll go through some of these headlines real fast. Okay. The U.S. approves this NVIDIA chip to the United Arab Emirates. Okay, there's always something on the tech space every single day, and this is the one for the day. Pretty simple. It sounds like it's going to be several $billion worth of chip sales. Okay, we don't know what quality, if these are the high-end Blackwell chips or not. We know that in the past, when we sell chips into the Middle East, they just turn around, mark them up, and sell them to China, right, for a profit. I think the game's changing, right? I think people are afraid to stay out of this AI space. They need to establish something. So I don't think that that's like it once was. And here's the deal, right, is that part of this, there's a reciprocal, I think what the administration is looking for is a reciprocal amount of investment back into the U.S. Okay, so we'll give you this, but we want you to invest back in the U.S. as well. This goes back to the sovereign wealth funds and so forth, okay, that we've been talking about. Okay, so the question is not how the money, who's putting up the money, it's just the fact that it shows up. So if we offer $2 billion worth of sales to the United Arab Emirates of NVIDIA chips and so forth, how much of this money comes back into the U.S. in whatever form? So if it comes out of a sovereign wealth fund, I think they're okay with it. If it comes out of, private investment funds, I think they're okay with it. If it comes out of public investments, I think they're okay with it. But some sort of reciprocal, and that seems to be the deal that's being made, and it's a good deal, right? That the question is, where's the money coming from? Where's the money coming from, and is it part of the sovereign wealth fund scenario that seems to be unfolding? Okay. We covered the First Brand stuff. Let's see. Okay, so here we just had a headline. Treasury regulatory framework is too light. Will release the Treasury budget statement after government shutdown ends. So I don't necessarily know what that means, but the gold market loves that. Gold market just took off again on the upside. The framework is too tight. Regulatory. Well, I mean, I guess that means deregulating to some extent. We'll release the Treasury budget statement after the government shutdown ends. Okay, and then we see another headline. Well, let's just take a look at this while it's coming through. Okay, so then we see this Japan PM elect Takaichi do not see immediate need to revise the Bank of Japan government joint accord. So, yeah, I could draw some sort of a connection between those two, but it's not really worth it. I don't know what this thing with Treasury percent is, but it definitely had an impact on the markets. I could see the markets moving around quite a bit off of that. So, again, continue to watch this. And, right, the Secretary Bessent is been pretty quiet, I think. We haven't seen him out in the forefront. He's the one that's probably laying the groundwork for who's going to be the next Fed chair. He's the one that's probably leading a lot of these negotiations with the United Arab Emirates, with this NVIDIA, with these chips. He's the one that's working with Howard Lutnick behind the scenes, probably working heavily on the trade deal, getting negotiations going with China. We've seen him lead that with TikTok. We've seen him lead that with other negotiations going on with China. When he says reduce framework, I don't know how that ties in. I don't know what that means. I don't know where to categorize that. But it definitely just had an impact on currency markets and everything else. Okay. Okay, so Macron, real quickly on this. Macron, France, expecting to install a new prime minister by Friday. The process begins to form another new cabinet. Okay, so this is 28 days ago is when Lecornu was brought in as a prime minister. This Lecornu is now talking about putting together a 2026 budget debate. So a debate on the budget as soon as possible. They have spiraling deficits, fragile public finances, and they say they want to bring down the deficit by the 2027 elections. That's when Macron, I don't know how Macron can survive another election, okay? It's surprising that he's even going to potentially survive this, all right? And here's what's up for grabs is there's only some people were saying there's only one way for them to avoid a snap election, which is like kind of a, like a shotgun wedding, right? That kind of a thing, this snap election. And that is to appoint a left-wing prime minister from this LFI party. Okay, so what does it do? It risks a minority coalition. And so, you know, this thing's in major turmoil. And how are they going to kick the can down the road again? If we look at their stock market, it's probably going to all-time highs. And you have to ask yourself, like, how is this the case? I need to pull up the cat current and just see what that thing's doing as well. These are the things that boggle the mind. And at some point, you'll look back, right? Somewhere down the road, we'll look back and say, none of that stuff made any sense. And, I think that's where we're getting to. This stuff is making no sense. Someone's going to lose here big time. If the U.S. is going to win because of these tariffs, someone else is going to suffer, right? And the gravy train that they had for all these years of being able to rip off the U.S., if that goes away, this feeds back into the dollar, potential dollar higher, right? It also takes away, someone's going to lose here out of this stuff, right? Someone's going to lose. We were losing, right? The American people were losing clearly with these unfair trade deals, okay? So if we're going to not lose as much, someone else around the world is going to lose, and it's going to have an impact. Yet the stock markets go higher globally. Okay, so again, someday we're going to look back and say none of this added up, and how did this happen? And then, and by the time we figure out how it happened, the move will already be done, right? And the pain will already be suffered, and people will say, oh, "Why did this happen?" Like same thing like with the 2008 real estate crisis or anything. If you don't anticipate it, then when it happens, by the time you figure out what happened, by the time the movie comes out to explain with the little captions, okay, this is a collateralized debt obligation. For those of you who've seen that movie, The Big Short or The Great Short, whatever it's called, for those of you who've seen that, by the time that movie comes out, the move's done, right? And so something's not adding up with all this stuff. But until it ends, till it's over, till it runs its course, it hasn't run its course. All right. So here we've got I think I'll leave it at that on France. That thing's going to continue to unfold. There's no reason to over-investigate that until something really happens. There's a good chance they're going to bring in like an elder statesman that they can somehow sell to the parliament, right, and make everybody happy. Problem is you're never going to make the conservative leader, Marine Le Pen, happy with all this stuff. She's been calling that this is basically a scam for a long time. Okay. We covered that. First Brand's bankruptcy, Macron to name the PM by Friday, and then this Israeli peace deal. All right, we can go through this pretty quickly. This will get covered all day. It's already been covered all morning and last night, and so the question is, President Trump's going to end up going to Israel, right? The Israelis seem happy, right? This deal's gotten done. They're trying to pat him on the back, right? He's going to get accolades for this, and he deserves it. I think, right? I think so. The problem is, though, are we going to just whitewash over the atrocities that happened? Okay, so this is great. Why the peace deal now versus, a year ago before all the people died? And then the question is, who's going to roll into Gaza, okay, and who's going to take this over, and who's going to the reconstruction, okay? So it's going to be one of the most expensive reconstruction projects, and the question is, who's going to benefit from this reconstruction? We're not going to know who was involved until we see who's benefiting from the reconstruction project, really. That's when we're going to know. Is it going to be BlackRock? Is BlackRock going to be in there? Because BlackRock has a infrastructure play that they made a year and a half ago. Is this part of their? Who's going to get the? When you think of these, if you think of Gaza as one big project, right, and some general partner who's going to oversee this reconstruction of Gaza, okay, and you look at this thing and you say, who's in charge of that? And then who are all the subcontractors in charge of that, right? So you're going to have banks, you're going to have these big, general contractors doling out, these projects. You got to build this, put in a, runway, put in a building, all this stuff that, however they're going to reconstruct this thing, because it's been decimated, right? And the people have been decimated. We're not going to know who the beneficiaries, once we know who the beneficiaries are of this whole thing, we're going to then know, all right, this is probably what happened here. Now, we know that there was a stand down. Okay, clearly Israel stand down against the Hamas invasion. And what that do? It allowed them to come back and take it from that point to this point, right? As ugly as it's been, it allowed that to happen, the stand down. Not only that, there's 6 other fronts across the Middle East that Israel's been active in. Okay, Syria and even into Qatar, right, launching missiles into there. So the point is that stand down enabled Israel to run wild, and we facilitated a lot of that. And now it's a peace deal, right? And everyone's going to take a victory lap and say peace, the first peace in 2,000 years. Maybe I'm seeing this wrong, but that's how I see it from an economic standpoint. I know there's got to protect, the Holy Land, and I get all that, right? But the point is, from a financial perspective and from a human atrocity perspective, it's, it's hard to take a victory lap for me on this whole thing. Okay, so that's what I'm going to be watching for. Is once they get this done and they start the reconstruction process, whatever that means. How much is it going to cost? Who's going to be involved in financing it? Who's going to be involved in running it? And what are they trying to achieve with it? Okay, what are they going to do with Gaza? Right, that's going to tell me a lot. All right, okay, so a little bit negative there, but all right. And then here's one thing to end positively on: this Antifa roundtable. You guys will probably see this because you have your ears to the wall. You guys are paying attention. I doubt most of the world's going to see this, but the Trump administration put together a roundtable, and they had, let's see who was sitting at this thing. So we had Kristi Noem, Kash Patel, Susie Wiles, Stephen Miller, Levitt, and Trump were there, right? President Trump. And I think that was maybe someone else. And then they sat there and they listened to the claims of Nick Sortor, who just got arrested recently for stopping Antifa from burning a flag. This Andy No, who got beaten almost to death, covering Antifa riots and so forth in the past. Posobiec was there, which I didn't even listen to what Posobiec had to say. I'm pretty frustrated with him. This Brandy Cruz, she got beaten by Antifa a couple of times. And then this Katie Davis-Court, another independent media type, all had altercations with Antifa. And so they were there talking about it. Oh, and the biggest one, I think, was this Savannah Hernandez. What a superstar yesterday. I mean, she called it out. She laid it out on Bondi. She laid it out on Kash. And she was pretty forgiving to President Trump for having the round table, but also calling the whole thing out. So it was a really great conference in the sense that they got to call out, it's a very unfair situation where the left is able to just trash and burn and pilfer and do whatever they want. And they might spend a night in jail and then they're out, So this is nothing new to us, but it was really good to see, this meeting of, the Savannah Hernandez, who are well-spoken and just a superstar. I mean, I've seen her go into places I wouldn't go into, right? All by herself, crawling through fences, going to get the story. I mean, she's impressive. Very, cute, but, very feisty and just determined, right? And very smart. And she just laid it out on him yesterday. So that was a very positive thing, and I think they were all ears, right? So again, we'll see if there's any action out of the DOJ. We'll see if anything changes with, the FBI, with the DOJ. We'll see if any of the stuff changes there. But look, this is the first step, right, to trying to turn that around. And so I don't think that it's going to get covered much. I don't think the mainstream media will cover it at all. It was sort of a quiet meeting, and it goes along with, moving the National Guard into these different cities and so forth. I mean, I think it pairs up quite nicely with that. So we'll see what happens with that. And I think that wraps it up for the day. Let me look in here and see if there's any questions at all, and we'll go through some of this stuff. It's kind of a, let me see here. Okay, Jay White. Okay, we've got Gordon Q. I'm selling calls on rallies, but still buying dips. Selling calls. Okay. I mean, I like that. Yep, that makes sense. That's good. Good strategy. Filippo, great day to move out of Max TQQ. I'm balancing into GLTR, some gold, but also the boring stuff, utilities and healthcare. Also a defense ETF. Good luck. TZ Burton, good morning. Rachel Hawk, sorry I'm late. What did I miss? I don't know where that came in. I don't have a timestamp on this, so I'm not sure, Rachel. We did a lot on the charts at the beginning. I wanted to go through this trade that I was looking at on the S&P. I thought we had something, right? It looked pretty good, like we were going to get a couple waves down and at least give ourselves a chance. I would love to have seen the market sell off just to give us some perspective, right? When you're at all-time highs and you're pressing to all-time highs and you're pressing to all-time highs, it's great if you're going to work, pumping money into 401k, and you're not thinking about it, right? It's great for that group. It's perfect, right? You're not thinking about it, and that's the best place to be. If you're actually watching markets and you're concerned and you're thinking about it, this constant, sideways, 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 pop, sideways, 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 pop, right, is very difficult to and you lose reference, right? It's just this constant grind, towards some level. So then you have to start saying, okay, well, what's that level? So we said 50,000 Dow is starting to look like it's in the zone, right? So that's kind of what we covered with the charts out of the gate. And we're seeing that, we're getting carry through with some of these other, the Dow looks good finally, right? It's showing up in breaking into new highs. The S&P and the NASDAQ are definitely been the two leaders. Those were the two we had the harmonic structures on. They're clearly the two leaders. They're also the ones that have gotten most overvalued as well. And then we see the Russell coming along too, right? That's a small to mid cap. That's what we were really talking about at the beginning. Okay, and then we've got, let's see, Gordon, the most useful application for AI so far has been students using it to cheat. Yeah, that's true. That's a good point. The bottom half are struggling with high cost of living. The higher end is doing very well in spending. That's a disconnect. And see, that's the thing that this administration came in and said they were going to fix. That's what Howard Lutnick said they were going to fix. That's what Scott Bessent said they were going to fix. President Trump, and so, it's not easy to fix, right? Scott Bessent has said this many times. Wall Street will be the recipient of what we're doing, but we're not focused on Wall Street. And, maybe this goes to show how little control they have over things, because if that's really their intent and that's really a genuine comment and they really truly believe that, then they're not very effective, right? Because I don't think I'm not sure, right? At least so far, right? I'm not sure that we're seeing the bridging between the haves and the have-nots. Okay, I think it's actually just getting worse in some ways. And not only that, we see guys like Posobiec coming out and promoting civil war, right? Showing this movie, talking about how the left, this is such a hard, when you get to this discrepancy between haves and have-nots, right? Civil war is very easy to foment, right? It's very, very easy. Okay, we've seen that through history. The French, right? The guillotines. We've seen this stuff time and time again. We're seeing it all around the world. How do we bridge that? And do they have a plan, or are they just, when you see these massive tech deals going down, right? And you see hundreds of billions flowing in, and you see the administration promoting that, right? And you see this kind of stuff. It's like, do you have to do it to stay competitive on a global front, right? To compete against China, not let China take over, or not let, whoever else our main competitor is, on this AI front. I mean, who is our main competitor on this AI front, really? Who is it? That's the other question. So we're competing against someone on this AI front. We're pumping tons and tons of money into it, and every day it's a story of some deal going down, and it's not little, right? You're talking 20 billion, 50 billion, 100 billion, right? And yet the people, could benefit greatly by $1 billion, right? If low end people actually got $1 billion, right, allocated to some program, that would be great. So we're forcing all these tariff deals. Maybe this is what has to happen first, right? I don't mean to sound so negative, but I just don't see the bridging between the haves and have-nots. I just haven't seen it myself yet. I keep hoping for it, right? I keep hoping that that's where we're headed. And in some, to defend them to some degree, like they were left with a train wreck, right, from the prior administration. I mean, Janet Yellen left them with a train wreck on the Treasury side. Cities were ready to implode. It was just a matter of time. So are they dealing with these things to stop, us falling off a cliff? And then they can come back and, and then how do you do that, right? How do you redistribute this in a capitalist system? And this is where, I'm torn on this sovereign wealth fund. I think the sovereign wealth fund could be used very nefariously. I also think it's one of the greatest ideas in the world, right? If you could put assets into a sovereign wealth fund and somehow connect, the have-nots with this sovereign wealth fund, now all of a sudden you pool them together, and now they're in the same, they're getting the same benefits as the haves, right? They've now been, all the barriers that have been put on the have-nots, right, to not succeed. You put them in a sovereign wealth fund, right? Get them some exposure to it, and now they're playing the game with the haves. Okay, maybe even better in some ways, right? So there's this, is that what they're doing, right? Or is this to roll out the technocracy and complete control of the world? I mean, I don't know, right? I mean, I'm very concerned because I see it leaning. I think it's leaning toward control of the whole world with the technocracy. But you have to look at from the other side. How do you bring the have-nots along and not get a civil war and not get global war, right? I mean, we are on the edge of civil war and global war, no doubt about it, and it just doesn't get covered, right? The whole thing with Russia and, all the drones and everything else and the missiles and the long-range attack and 2,000 miles deep into Russia with our guidance systems and so forth. I mean, to me, that I don't think you can get much closer to a major breakout of World War III than that. And yet we see civil war continuing to potentially be stirred up, and how do you stop that? I don't know. So anyway, with that, I think that wraps it up for the day. Hopefully that gives you a little bit of a background on that, Rachel. So interesting. How about the scammers lose? Oh, I saw Antifa Roundtable. It was fantastic. I mean, you have to say that was Savannah Hernandez is a superstar. I mean, she's just so impressive. Who's sick of the media? Yeah, I think we all are, but it is what it is. All right. So with that, hopefully that was we hit the stocks today. Hopefully we did a good coverage on it. I'll just leave it at that. There's so much more I'd love to do in terms of, and working toward doing. I really want to get to the point where we come in here every day with 3 great ideas. It's like, here's 3 great trading ideas. We can do this, this, and this. Here's where we manage. Kind of like we did with the S&P yesterday. It didn't work, right? But again, the chance is there for it to work. A lot of the parts and pieces are there. It didn't work, but at least we didn't take much of a loss, right? That's the key. If it doesn't work, get out. That's the key. And so those are the things. Most of the time, a lot of the time, right, those will work, right? When we put ourselves in the right situation with good probabilities, they will work. This market's just so strong, right? I mean, it's just so strong. Gold is so strong. I mean, gold just, forging new highs again, just doesn't. I mean, yesterday when this deal came out, when the peace deal came out, gold saw this big spike down and then it hit a moving average and they were back in buying again almost immediately. So it's just so strong. And I think at some point this gold, I had a whole thing on that. I'm going to save that for tomorrow on Commodity Day. I'll save that on gold for tomorrow. Okay. With that, everyone, thanks for joining us. Man, there's so many stills I wanted to go through too, but I think we covered it all. It's just a lot of me talking. I wanted to sort of break this down where we've got more videos and things like that. It's just, trying to fit it all in is tough. So with that, have a blessed day. See you tomorrow, Commodity Day. Take a look at this gold again. I've got some interesting thoughts on this gold, some more thoughts as I watch this stuff unfold and what's really going on, big picture. We'll take a look at that tomorrow. Take a look at a little bit of the agriculture as well. So have a blessed day. We'll see you tomorrow. Thanks.